All right, in business news, the National Bureau of Statistics says Nigeria recorded a total foreign trade of 12.05 trillion naira in the first quarter of 2023, representing a 17.5% decrease compared to 14.6 trillion naira recorded in Q1 of 2022. According to the foreign trade statistics for Q4, the slight improvement is attributed to a marginal increase in import and export trade, resulting in a positive trade balance. The Bureau says total exports stood at 6.48 trillion naira, while imports amounted to 5.55 trillion naira, adding that exports increased in the first quarter by 2%, but declined by 8.66% when compared to 6.35 trillion naira recorded in Q4 of 2022 and 7.10 trillion naira in the corresponding quarter of 2022, respectively. Nigeria recorded its second consecutive positive trade balance after enduring multiple foreign trade deficits in recent past. This improvement is largely attributed to improved crude oil production. Amid Nigeria's rising debt profile, country resident representative of the International Monetary Fund, IMF, Mr. Ari Asin, says Nigeria needs to efficiently raise revenues and manage its expenditure if it wishes to resolve its debt issues. He said this at an event organized in collaboration with the Debt Management Office and on the need for Nigeria to address current revenue shortfalls while advising government at all levels on the need to concentrate on revenue generation and cut down on expenditure. According to him, Nigeria's high expenditure on its low revenue base is contributing to the country's rising debt, because the government is spending more than it's getting in revenues. While advocating for fiscal discipline in spending, the Washington-based bank is advocating for good governance and effective tax administration, whereby all entities are paying taxes and seeing its impact on national development. As the Nigerians await new ministerial appointments under the new administration of President Bola Tinubu, aviation stakeholders and experts have expressed some of the challenges ahead of the incoming Minister of Aviation, amongst which includes the increase in air passenger fare, that's aviation fuel scarcity, and of course the takeoff of the Nigerian Air Project. Aviation analyst Olumide Onwayo was on our business program, flagship show Business Nigeria. He has some advice for the incoming administration. That's the minister that will take that portfolio.
The person coming in has a lot of landmines waiting for him, so I do not envy that person. And he cannot come with that word as, oh, let's bygone be bygone, we want to move. There's no way he can move. You have litigations waiting, both in the concession of the airports and those and for the Nigerian Air Project. You have issues with the union, outstanding consequential adjustment in payments. A strike was called off and they were giving some days to, and those days have not lapsed. Then you still have the general discomfort among the staff of the agencies. The PMS that has now been regulated has made the transport fare, road transport fare, astronomical. So we're expecting more people. So how do we capitalize? We need to now build a new level of airlines now. They're already in place. They need to now look at that structure, maybe making a low-cost fare out of their services that can run shuttle or make quick flights and at a reduced price to make more people come in and fly. And that's the priority we all have. It cannot only for the minister. The industry in totality must partake in having this. And in doing this, we must work on things that causes delay. We must look at how to drive cost and bring down the cost of operation, and also see how the agencies and government can help with the taxes and other charges.
Asian stocks nudge higher today as soft U.S. economic data reinforced expectations that the Federal Reserve may skip an interest rate hike when it meets next week. MSCI's broadest index of Asian Pacific shares outside of Japan was 0.17% higher, shrugging off earlier losses, while Tokyo's Nikkei gained 0.65%. Pictures indicated European stocks were set for a muted open, with Eurostock 50 futures down 0.05%. German DAX futures up 0.06%. FTSE futures are losing 0.04%. Australia S&P/ASX 200 index lost 1%, while the Australian dollar surged 1% after the central bank raised interest rates by a quarter point to an 11-year high. In the currency market, the dollar, which measures the greenback, against 6 major pairs fell 0.14%, the euro up 0.12% to $1.07. The yen weakened 0.10% to 139.44 per dollar, while sterling was last virgin $1.24, up 0.09%. And the CEO of the Bank of America, Mr. Brian Moynihan, says the bank is preparing for a potential recession this year, including the possibility of a sharper downturn where unemployment continues to be on the high side and climbs rapidly. The Apex Bank chief discloses this when he appeared on CBS show Face of the Nation. He predicted that he called a mild recession later this year and early into 2024, which is notably timely during the highly anticipated presidential election year. The bank have also approved 7 straight rate increases in 2022, raising the federal funds rate to a range of 4.25% to 4.5%, the highest level since 2007, and forecast a peak rate of about 5%.
It's tipping over, but one of the toughest things for the Federal Reserve is the power of the U.S. consumer. And they were employed, they were earning more money, and they were spending. And what you're seeing is that's tipping down. That's a key component to actually getting inflation under control. Because if the unemployment's at all-time lows, people are getting 5, 6, 7% wage increases, and on a multi-year above the rate of inflation, and a 1 year not. That creates a hard job for the Fed to slow that down because the U.S. economy is so consumer-led. They have won that battle. They've won that battle. Lending has tightened largely because of 2 factors. Beginning late last year, just the feeling that a recession, everybody was predicting a recession and going into recession. People tend to tighten credit standards, tougher covenants and things like that. And then the second thing is the disruption caused the capacity to lend to come down, which again is as they pulled money out of the banking system and into the Federal Reserve as cash or into the overnight repo facility, and deposits have come down, part of the monetary tightening, there's less engine in the engine room to lend, and then so that causes banks to be more careful when they lend and who they lend to and how much they lend, and so that's tightened credit standards pretty.
The U.S. Federal Trade Commission have fined Microsoft $20 million charges after it found out that the tech company illegally collected personal information from children without their parents' consent. The company is being charged for violating the U.S. Children Online Privacy Protection Act by collecting personal information from children who signed up to the Xbox gaming system without notifying their parents or obtaining their parents' consent. By retaining children's personal information, a spokesperson of the company says the company is committed to complying with the order, while adding that account creation process would be updated and the data retention glitch found in the company's system will be resolved. Recall that last week Amazon agreed to pay $25 million after U.S. Federal Trade Commission found that it retained sensitive data, including voice recordings of children for years. Apple has unveiled its much-anticipated reality headset called Apple Vision Pro that seamlessly blends the real digital world in one space. The company's latest invention is controlled with eyes, hand, and voice. The headset comprises of 2-hour battery life and will be released early next year in the U.S. The cost is considerably more than virtually related headsets currently in the market. Now, the tech firm's stock has surged consistently since the beginning of the year 2023, with investors viewing it as safe haven in periods of economic risk, given the strength of its balance sheet. Crude oil prices tumbled more than $1 a barrel today after a strong rally in the previous session, as worries about the global economic growth outweighed Saudi Arabia's pledge to deepen output quotes. U.S. West Texas Intermediate crude fell to sell at $70.17, with a decline of 2.74%. Brent also experienced a downward margin of 2.53% to sell at $74.77. Bonnie Light records an upsurge of 1.82% to sell at $76.56. And for the OPEC basket, crude dealers are offering $73.35 with an uptick of 0.77%. That's business news. Join me at the top of the hour for Business Nigeria, where we talk more business.